Hey traders, welcome to Charts and Coffee. Happy Monday morning, everybody. Hope everyone had a good weekend, stepped away from the charts for a little while, except for top tier outlook at 6 o'clock, of course. All right, let's take a look at what we've got going on this morning. By the way, the layout that I'm sharing with you right now is the 5-minute time frame over to the left, the daily time frames in the center, and the weekly time frame is over to the right. And I thought I would mention the weekly time frame because unlike the drops we saw in 2019 and 2020, where the weekly time frame actually lost even choppy, if not uptrending structure and turned into weakness or a downtrend, notice that on the pullback that we saw earlier this month, there was nothing but a weekly time frame mean reversion. So as I mentioned back then, and we see it now 2 and 3 weeks later, that crash was greatly exaggerated. The end of the world just really did not. It's amazing to me. It's amazing to me the hyperbole with which the markets communicate movement. It's a crash. If it's a big candle, very interesting that where we sit right now also is pretty much just above where the initial sell-off began. And if we were to imagine erasing all of this action between, say, the 24th of July down to, say, the 7th of August, we were just to erase that, we're pretty much in that previous zone. And that previous zone I'm identifying with the automated Darvis levels. So if we were to look at the Darvis levels that preceded that time, and I'm just going to go ahead and draw it in. Just bear with me. Let's see. Let's go grab a nice little frame here. So this was the zone from top to bottom. This is where we were before all of that happened. That was an automated zone that popped up on my charts. And that's obviously what we broke. But do you see we're right back in that area? It's almost as if the market said, look, let's just kind of forget about it. Like it never happened, right? And that's exactly where we are. And if we think about what's next, all right, so we got over that whole carry unwind and Japanese yen versus US dollar currency hedge. So now where are we? What's next? That's always the question. What's next? The market's always asking that. Well, we got one part of that on Friday. And that was Jerome Powell said, rate cuts. That's what's for dinner, right? And that's exactly what equities loved. And, a lot of folks asked Rag, in other rooms, I said, Rag, you really weren't heavy long the indices going into Powell. We never know what's going to happen. We work probabilities. And so going into that event, I knew one thing for certain, that Jerome was probably going to mention interest rates. He was probably going to mention inflation. And the one symbol that was poised, probably better than any, to continue higher was gold. Gold is a play on real yields or real interest rates, which is the shorter end of the yield curve. What is the yield of the bond on the shorter end of the yield curve? Think 1 year, maybe 3. And what's the rate of inflation? And if you do the math between those two numbers, you get this thing called real yields. It's the chasm between the two. When that narrows, gold goes up. So if interest rates are going to be cut and inflation's gradually declining, that's narrowing. If the expectation for interest rates is to go down and for inflation to go down, as long as that chasm between the two stays pretty steady, gold's going to continue moving higher. So it was very unlikely gold would do anything but move higher on Powell. And my concern was, if for whatever reason Powell wasn't fully committing to the rate cuts during that Friday Jackson Hole Symposium discussion, whether or not he'd send equities lower. So I didn't think he would, but I didn't have a clear path of probability for it. So we stuck with gold, and we also stuck with Coke. So you know what? What's continuing to benefit? What's one of the best defensive stocks in an uptrend right now? It's Coke. So if news is good, Coke's already moving higher. If news is bad, Coke's already moving higher. So ask yourself more often than not, we can't do so with ever 100% certainty, but where is the higher probability of if this or that happens? this will either be steady or benefit either way. And those are the kind of setups we think about in the Sector Secrets Mastery. What are the probabilities for usually two different scenarios, and how do we best position ourselves for it? So we do have an open Coke position. We do have an open GLD call position going into this week. And by the way, this week should not be necessarily as low volume as last week, but I am expecting there to be low volume, because this is really the condensed version of summer, these last 2 weeks of August. I'll continue to monitor the volume, and just remember that when there are fewer people in the room, erratic action is far more probable than if there were a lot of people in the room and a lot more convincing has to be done. The other thing I want to mention is that we do have a number of pretty important hot zones this week. And one type of hot zone we have to put back on the radar are hot zones around the consumer, something that frankly has been fine to ignore for nearly 8 months in favor of what's happening with employment and what's happening with inflation. Now that the Federal Reserve is committed to the rate cutting cycle, which will likely be a very gradual multi-quarter normalization of rates, now we want to know, how's the consumer doing? And that's where retail sales and consumer confidence numbers will probably take a whole lot more spotlight than they have in the preceding, darn near 3 quarters. All right, so that's where we sit. And I know a lot of folks are anxious, curious, waiting with bated breath for earnings coming up in NVIDIA. That's coming up on the 28th, as you can see, after the bell. And, NVIDIA's waiting. By the way, that's Wednesday. NVIDIA's waiting is what makes it so relevant. By the way, it's not as if Apple and Microsoft can't have similar impact. I think what happens is, because this is such a huge stock, I remember reading somewhere that this stock alone has more weighting than 30 stocks of the DAX, the German DAX. So, it's a huge stock, but huge in terms of market cap only then translates to huge in terms of percentage weighting in the indices. And this is obviously very important to SMH, the semiconductor ETF. It's now far more important within the XLK, the technology ETF. Remember, this is where Microsoft, Apple used to be about 20% each, and then NVIDIA was about 5%, and they flip-flopped NVIDIA and Apple. So now NVIDIA is about 20%, Apple's down to 5%. So obviously, along with the semiconductor ETF, the technology ETF has a lot more NVIDIA, 4 times more than it used to have. And then, of course, QQQ. This is one of the Magnificent Seven, and even the SPY, if you want to look at the NQ and ES. So, of course, its weighting is going to have far-reaching implications. And yeah, of course, anything heavily weighted in an index, in a sector, is going to be something we need to watch. Is it more important than other stocks? It's more important than other stocks that are less weighted, right? So always think about weighting. And of course, NVIDIA is going to have a huge impact on Wednesday. So along with that Wednesday hot zone, we also have preliminary GDP on Thursday. We have the PCE on Friday. So we have a lot of things going on in what seems to be kind of a sleepy week at the end of summer, but really should be a little bit of an early kickoff to the fall trading season. All right. So oh gosh, the skies just opened up. Wow. Okay. So let's get to the questions as always. First up, Pat asked, could I give my thoughts on 6E and 6A? 6E looks like an uptrend. Agreed. It's a very fresh uptrend, which then denotes US dollar weakness, which makes sense because any central bank of a country that's about to embark on rate cuts will weaken the currency. It's a very normal thing. Lower rates in a country equal a weaker currency. That's by design, right? So yes, agreed on 6E. The other question is 6A. So 6E and 6A, by the way, are the euro versus the US dollar and the Australian dollar versus the US dollar. US dollar is always in there. Aussie is still choppy, although I'd consider it mostly bullish chop. I'd keep an eye on the resistance around 6,800 on the 6A. And I agree, 6A looks overbought. 6E, the euro, once we organize into a trend, I no longer look at anything as being overbought because remember, trends are inherently imbalanced and there's always going to be a little bit more support after a pullback in a trend than if we're in chop. So I would treat 6A as a chop. Use whatever choppy market indicators you prefer. Look for overbought and oversold levels. On the 6E, I'd focus on things like mean reversions and retracements and pullbacks and where focusing solely on the long side, we could get long. I'll look at things like the daily price movement range for those zones, which you can see have been working very, very nicely since we've had the steadiness of the green candles, going back as far as the 8th of this month. All right. Next up is what tracks? Here we go. Hey there, Penelope. What tracks with IWM? I'd like to watch it, but not sure what tracks above and below it. So IWM is actually the RTY, which is the Russell 2000 futures contract. And when we're looking at the RTY, we're looking at pretty much a nearly 24-hour version, 23 hours version of the small caps of the Russell. And so what tracks with it, what tracks the futures? Well, the ETF, IWM, is the alternative. So if you're looking at, on one hand, you've got the RTY, on the other hand, you've got the ETF, it's going to track like the RTY. So that's the IWM. And then within that, you've got the KRE. And I'll tell you again, one of the reasons that the Russell has really had a difficult time keeping up with the broader average risk appetite, S&P, NASDAQ, even the Dow, is because KRE month to date has been a laggard. When you take a look at the XLF, it's up here. All right, you take a look at XLK, that's up here. XLK is the number one weighted sector in the S&P and the NASDAQ. XLF is the number one weighted sector in the Dow. The number one weighted sector, not by a lot, but it is the heaviest weighted sector in the Russell is KRE. The Russell is not going anywhere until the KRE at least starts going a little neutral or starts strengthening. So keep an eye on the KRE. So it's Russell Futures. Your ETF alternative is IWM. And the heavy weighted sector is KRE. And those are that's the way in which I look at the hierarchy of anything, right? The hierarchy of the index, the ETF alternative, and then the number one weighted sector. All right. So that is what I'm looking at the moment. And so just keep an eye on that KRE. Now it's been slowly trying to, obviously move higher. It's going to be very important if by the end of this week, KRE can go positive on the month, because right now it's still negative on the month. All right. Next up is Chuck asks, natural gas, Head and Shoulders. Chuck, I don't use Head and Shoulders patterns, so I can't comment on the Head and Shoulders part, but I'm happy to look at natural gas. I don't use chart patterns, gang. I use price patterns, which is distinctly different than chart patterns, but I have never, ever used Head and Shoulders. So far be it for me to tell somebody what it's doing. But remember, if you are looking at a Head and Shoulders pattern, what are you looking at? The most important thing of a Head and Shoulders pattern is the trend line, which is also called the neckline. So once you've identified that, you'll have a decent idea of where the support and resistance within that very sometimes large pattern is. Here's what I'll say. Even before I get to a price pattern, what I need to determine is what's the structure. The structure is still very much bearish, red candles below the key levels that I look at for a bullish environment. And it's a neutral structure at the moment. So it's bearish chop as far as I'm concerned. In order to be bullish chop, we've got to get above this anchored VWAP for the year. And ideally we get above this Darvis resistance sitting at about 2.3 on the natural gas. This is the daily time frame, by the way. So ultimately what I'm gonna look at is there's two ways we can really do this. One is wait until natural gas just gets above this area, and it's far more likely to continue higher above it. If you're looking at the range that it's in right now, and you want to trade it maybe a little bit aggressively, so that's your range. Here's your high to your low, right? That's your range right now. So if I go ahead and just put here we go, let's do this. Let's put a big box around it. Right there. If you want to trade within that range, favoring the resistance, that'd be great. If we bounce up, look for movement to the downside as we have. Now, does that mean we could take advantage of the movement higher? It's not a no. I would rather be a little bit more bearish, but this is resistance. This is support. This would be where the short sell kicks in. This would be where the long calls, the buys kick in. And so the closer we get to this area, it's going to be likely oversold. The closer we get to this area, it's going to be likely overbought. And that's the way I would look at it, right? That's the way I would look at what's happening right now on Natty. All right. Do I have any thoughts on Home Depot on the daily? Sure. All right. So Home Depot on the daily. It's hard to want to bet against what's happening in the Dow. Home Depot is part of that. It's hard to bet against what's happening in consumer discretionary for the most part. Home Depot is also part of that. And of course, I think the place that all of us are also thinking is home builders, home construction, ITB, XHB. Home Depot is also part of that. So it's hard to bet against any of the groups that Home Depot is a part of right now. Probably the most questionable one might be consumer discretionary. But after that, XHB, ITB, the Dow. I like the long side of Home Depot. Once you take a look at what it's grouped up with, it's not in an uptrend, but it's certainly much more bullish than not. So this is the way I would look at Home Depot. We have resistance in this area here. That's a Darvis level. I don't need this line here. Just bear with me. Okay. So there's your Darvis resistance right in there. And then as long as we're above, as you can see here, that's the anchored VWAP for the year. This is anchored to the 2nd of January, by the way, gang. So my anchored VWAP, which is a study of volume, time, and price, that would be putting us in the bullish hemisphere, if you will. So anytime we're touching this daily price movement range, that would be an awesome opportunity to take advantage of movement from that level to taking profit in the gold level. So I would need another pullback and then another surge to set up another opportunity on the daily time frame of Home Depot. I don't want to be short selling, even though it's running into resistance. Green candles prohibit me from long puts or short sells. So green candles mean long buys and long buys only. Being above the anchored VWAP puts me in the bullish hemisphere. And then the rest of the time, I'm focused on this zone in here, right, for the long position. All right. Robert asks, thanks for the question, Zach. Robert asks, I'm looking for upside on Apple and Ulta. I'm going to leave Ulta alone. That's an easy one. Grandpa Buffett just got into Ulta. It's got a big old gap on it. I need to see some sort of pullback before Ulta, or some sort of consolidation here before I would do anything with Ulta. Apple's pretty easy. Bullish hemisphere. It's above those key levels that I watch, both of these tools here. It's got, at least for the most part, I like these green candles. Neutral is okay, but green is better. But as long as it's not red, right, I can be a long call buyer, and that's going to be waiting for that area there. So a yellow or a green candle sinking into that gray zone will be a long position for Apple. But keep this in mind as well, gang. When we look at Apple, we're also looking at that grouping that it has with NVIDIA, XLK, the NASDAQ, and NVIDIA having the weighting that it has can pull the XLK around, can pull the QQQ and NASDAQ futures around. So I would look to time my entry on Apple, if I'm interested in that, with the volatility, the post volatility of NVIDIA. So that's not going to be till Thursday morning, where we also get the GDP, by the way. So I'm going to be at least cognizant of, if I want a longer term position on Apple, rather than just betting on NVIDIA having a huge earnings, which it might, but I'd rather wait to see some volatility and just keep in mind of the other influential stocks in those groups, like that XLK. All right, gang, as always, thank you so much for being here for Charts and Coffee. I'll see you tomorrow. Same time, same station. Until then.